Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. We finally had change in the longer time frame as we made new lows for the month. And the month new low is all but strong, being only 2 ticks above the key 2800 area. Obviously, we also see change on the weekly time frame with this marginal extension on the range low to the 2800 area. As pointed out yesterday on the briefing, the focus today was on assessing continuation from Friday's bounce. And as we've seen, all excesses to the downside have been erased. And as we just mentioned, we leave a very questionable low. So the top-down approach suggests that we have good odds of continuation down, given these three main factors: the erasing of the excesses, the inability to close this upper gap that we had and we still have there, and the questionable low, not to mention the weak structure underneath this green box. Zooming into the market profile, what we see that the move has some interesting behaviors along the way. Let me go back up. First of all, in the morning, the market lack of strength to the upside was first exposed by the inability to maintain the highs above the overnight high, which were around here, and it also failed to reach Friday's high. That was the first clue that the market was not strong today. However, after that happened, most of the session we consolidated and established a nicely overlapping value with Fridays and Mondays. So there was no change there, but it was in J period that we start probing lower and that the move developed. The questionable facts that I see on this break is that, number one, the move seems to be driven by short-term money, judging by this amount of highs all at the same price. Every time we went there, was selling, and at the end they got what they went after, but that's very suspicious. Also, it was an emotional move suggested by the stretch out of the break. We ended up with 5 distributions on the day. That's not common. I was having a close look to the volume of the underlying market, in this case the New York Stock Exchange or the overall index, and the volume did not back up the extent of this move. Also, at the end of the session, there was a big pickup in volume, and if we look at the last 2 periods, there was an inability to go further. So that tells me that probably that pickup in volume was closing of short positions or even some buying because of the inability to move further down. But again, that left a very questionable low with only 2 ticks excess. So the overall situation is that the longer time frame suggests good odds of continuation, but the profile exposed a market that could have gone too far too fast and maybe in need of a corrective move before advancing further. So the immediate focus for the morning is obviously on value developing relative to the lower distribution that we have here and the 2800 area that is in proximity. Acceptance above 2805.75, which is around here, and even closing the distributions will denote change, and that will suggest that the market is finding some balance. I think that the immediate odds are good for some correction. However, that doesn't have to happen. The market can continue lower. Today was a good example that anything can happen at any single time. So remember, odds are just odds. Let's just keep monitoring and doing rational decisions. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.